you so much. I'm really excited to be here and to be able to present this research. It's called Decentralized Governance in Digital Asset Prices. It's joint with Ian Appel at UVA Darden. And so I want to start with why I got really excited about DAOs when I learned about them, which is really that it's a transformational business idea in my mind. With apologies to Hegel, Marx, and Lenin, the basic unit of modern society is neither the state nor the commune nor the party, it's the company. And this actually comes from a book which I happen to be at my desk, so I could pull it out. It's this great book about the company. And at the time, it was seen as totally radical and people were making fun of it. But I put this bread up here too, because the company, when originally, the word it comes from was campagna, which is Latin for breaking bread together. And it was thought to be bringing people together from the community, right? And so if we go back to then later, 1862 is the first company. We get then, 1900s, we get our theory of the firm. And the stuff I really like, where it's, why do we even have firms? It's to optimally, organize economic activity. Well, we've had all of these changes to sort of the infrastructure out there in the digital age. And so it might be this time that, hey, the way to optimally organize economic activity is actually going to be very different moving forward for this new revolution that we're going through. And so this is other thing I want to put up here. Because I know with Sam Bankman-Fried and everything that's been going on, there's a lot of people who are like, the space is dying, it's dead, there's no more. Well, I actually said that also very much echoes what happened before, right? In 1862, they thought it was so ludicrous that you would issue a joint stock company. They thought it was speculative and crazy that they created an opera. And this opera was called Utopia Limited. And everybody went there for this great chuckle about who could believe that people are like, going and creating companies in the East India and doing stuff like that. And I think there's this sense right now that people are really doing that too. But I think DAOs really represent an increasingly popular and probably potentially transformational business idea. It's really rooted in the methods of modern times. But with that, I want to go back to the theory and why, also from an economist researcher perspective, it'd be really interesting. It was radical in 1862, but companies grew to be powerful because their legal structure really did improve efficiency and productivity. In fact, a prominent theory of the firm views it as a legal fiction serving as a nexus of incomplete contracts, or implicit and explicit contracts, right? So that's Jensen and Meckling that has so many citations. That's a lot of the work there. But agency conflicts have always emerged because contracts are incomplete, they're costly to enforce. Well, what if it's a nexus of smart contracts? So smart contracts can mitigate a lot of the frictions we typically think about in the nexus of contracts. Run on the blockchain, so for example, Ethereum, that automatically execute operations and transactions. So a decentralized autonomous organization or organizations that facilitate coordination between a large number of individuals and are typically governed by a smart contract. So rather than a decision-making authority resting solely with managers and a board who basically advises and monitors them, we have a very different authority structure where authority is resting with the token holders who are going to submit and vote on proposals and really dictate the DAO's operations. So in this paper, we asked simply, how are DAOs governed? And then how does this affect their valuation? So what is a DAO? So what we do in this paper is we collect data, and I will admit, I wanted to get it out here for you guys, and I've seen a little bit of the data. We finally updated for a whole additional year. So in the updated version of the paper, we're gonna have over 300 DAOs and close to 20,000 proposals. Right now, we're working on about 150 and about a little over 10,000 proposals. But what they are, it's sort of continuing to be the same way. They are really either for-profit or non-profit, with the primarily focused on, sort of what you would think, crypto native activities, so things like decentralized finance protocols, DEXs, and Web3 activities. So these are some people who have done curation through asset management, or these can be some of the like public good services like Gitcoin and stuff like that. So they can really have virtually any objective. They do not typically have managers, as I suggested.
Can I ask a question?
Yeah.
You are focusing on DAOs that only on blockchain? Because I heard that there is some companies that do DAO, but not in a distributed blockchain, like in a central blockchain. So it's kind of people that try to adopt DAO, but to do it in a more centralized way.
I mean, so I think those are some interesting questions. So I will say some of the ones that we exclude. So there is a fair number of them who follow sort of the nouns DAO pattern because they made theirs open source and so people copy it. And this is more of an NFT based one. NFT prices, then what? You're going to have to link it to Ethereum. It's not like it's really getting a price. And so I think we have excluded a lot of those ones. I think that there is also there's actually really great work by Nathan Schneider and others looking at sort of the similarity between DAOs and cooperatives. And you have to ask, what is a DAO if you don't legally, register it, right? It's going to default in US law to a partnership. And we have a lot of information about partnership law. So right now, I will admit when I go through them and what I'm looking at, and you'll sort of see how we go through all of these different characteristics of DAOs. We're really trying to focus on the ones that, I maybe might call more prominent. They have sort of a business model, at least in some sense. It's not like I'm just putting, but I will admit there's some up there like Friends with Benefits, which I mostly still think of as a social club rather than, or we also have Bored Ape chat clubs in our setting too, because they have the ape coin. And so, yeah. Okay. So they don't typically have a, they're with formal rights. It's in with token holders, but the governance is defined, and this is sort of one of the key things. It's defined by the smart contract. And so the smart contract will encode specific features of the proposal and voting process. And we'll talk about those features more. To set example, and I think this is the one that most people might have heard about, was when, we decided to go after one of the prominent broker dealers, but there was the Constitution DAO. And so it was a group that basically tried to raise money really quickly to disperse funds. And the goal was just to basically buy a copy of the Constitution up for auction at Sotheby's. They actually were able to raise 40 million very quickly. They lost out on the bidding, but they did it through the sale of people tokens, and then the people tokens had governance rights. And those governance rights allowed them to liquidate ex post. Like they could have used the money raised to go after and do something else, or maybe to allocate their funds elsewhere, but they chose to liquidate. And this is sort of an example of thinking of how they're doing it. And an alternative definition of DAOs could just be, a community with a joint checkbook. I've heard that simplified version as well. I think a more common example, and sort of probably to anchor you in what our data is, since I know that the majority of our sample is DeFi protocols, would be MakerDAO. So, right, it's an over-collateralized stablecoin backed by digital assets. The Maker token is basically allows the token holders to govern the protocol. And, as of has total value locked about 7 billion. This was actually, it's gotten better than 600 million because of recent price increases. I think I had originally put this in my slides last December when we were almost at our lowest. But it gives you a sense. And even Uniswap, I think, is something you guys brought up earlier. Uniswap rivals Coinbase in terms of volume of trading and stuff like that. And so it's not that these companies are small entities, really, especially in the DeFi space. I would argue that they are, trying to grow into something that can be a meaningful portion of finance.
So sorry, we have a question in the Q&A.
Oh, okay.
Should programmers be considered as managers?
So I look at core team. So we sort of separate between core team members and contributors. A lot of communities tend to do. I think there's some interesting ways to think about programmers. I would not necessarily want to think of them that way. And maybe this is more from my legal background, because that's going to introduce some liability, right? That the company would want to have. And I think there's some interesting legal questions there. Right now, though, I think a lot of even core team members are trying to decentralize in some of what I will show as ultimately being our best systems, whether it's a new proposal or how you end up going through to get the code evaluated by other people for risk metrics and things like that. But I think it's an interesting question to think of them as managers, and perhaps a model that way could think of what tasks you're putting in, because a programmer has really specific tasks, but they don't necessarily have what we think of as general management tasks, which are coordination. So the proponents of DAOs largely argue that it's wisdom of crowds, low barriers to entry and regulatory arbitrage, transparency and flexibility, also significant drawbacks. So we've seen a lot of free riding incentives. Their DAOs are going through the same problem that the government goes through, that you can't get anybody to vote. And then there's malicious governance. And so we've seen definitely examples of attacks. And so we asked two main questions, as I said: how are DAOs governed? And so we classify common governance features of DAOs, including aspects of the voting process and organizational design and security features. Then we say, what are the value implications? And really what we're going to be focusing on, and this is a big point I like to make, regulators out there want to turn DAOs back into corporations. If you talk to them, they would love to get them back into this box of partnerships or things that we already know. But what we're going to argue is that you have a set of features that we call the restrictive ones that are really focused on some of these agency costs and sort of traditional corporate features. But we have new features that are being inclusive and bringing in people. It's not, you don't put shareholder proposals out to your customers. And so this is a really new feature. And then the same security features, there's much more security features in space. And so we're saying, when we look at this novel sort of full set of things, what's going on? And what we're finding is that the really benefit is coming from these other two features. And so I would strongly encourage regulators not to try to push governance back to the traditional realm, but allow for this open system. So what we find, is that token returns are positively related to these inclusive governance features. And they're ones that I think of as promoting broad participation, whether this is by customers, if you think of it in that space, people who are staking their tokens to get returns, stuff like that. But it's also, our examples of these features are sort of providing incentives to vote, which this would be, you might actually give airdrop more tokens or something like that, or no fees, such as like no gas fees for voting. We're doing it off chain to make it easier. They're negatively associated with, so token returns are negatively associated with restrictive governance features. And those are ones that create barriers to adoption on proposals. So this is things that are much more traditional. Sort of in the merger context in corporations, if you have a super majority, you have to get 66% of people to approve it. It's often very hard to get 66% opposed to 50%. It's the same here where they're doing things or saying, the quorum threshold is much higher. And then they're positively related to what we call secure governance features that protect against malicious behaviors. And I know there's some controversy over whether multi-sigs are good or not, but for example, having a multi-sig where you have sort of a few authorized people who all have the key and can simultaneously, you have to get a certain number of signatures for implementation. So I think the main related literatures that we're contributing to are the blockchain literature, a lot of this work on smart contracts. I'm sorry if I'm ignoring papers. I could have put many more, and we cite many more in the paper. I keep getting papers, and I think there's a lot of great work here. So I'm really excited about the people doing work in this space. And then more recently, the DAOs is really focused on token ownership. Ian and I have our own paper here looking at sort of its concentration and delegation and those dynamics. Here we really want to look at the governance structure. I think it's also early work on inclusion. I know we've thought a little bit more about fintech and financial inclusion, but thinking about inclusion in the DAOs is pretty, I think, important. Then the wisdom of crowds is something that I've particularly been interested in. And I think we're working on a second follow-up paper about that. Like, when is it optimal to outsource these decisions to the crowd as opposed to just doing everything, which is sort of how many DAOs started at first and probably is not the optimal way forward. And then obviously there's a large corporate governance and firm value literature where we know corporate governance matters. I think what I'm trying to say is maybe corporate governance matters here too, but it's different. Okay.
Can I ask a question?
Yeah.
So can you say something how like all these off-chain technologies improve DAO participation?
Yeah, so this is actually, so we look mostly at returns. And I think that this is basically to look at the broader literature, right? We have, though, recently brought in sort of what I'm calling like the real effects. And so we're looking at a couple of different metrics. I should put voter participation. Actually, I'll take a note of that one because I know we haven't done that one yet. So the things that I was looking at was actually, so I got social metrics. You can get Twitter follow, you can get Reddit users. So we have the social metrics, but then also for the DeFi subset, I've been looking at total value locked and sort of trading volume as other ways to try and establish that we're getting real effects that are growth, not just these sort of, markets could be inefficient. We're well aware that markets could be inefficient. And so maybe what we're observing is just, wrong. I think we go through a lot to show that it's not, that it does seem systematic rather than arbitrary, but yeah, that's a great question. Okay, so I'm going to go into a case study of Compound. The reason why I'm doing Compound is because they had one of the first governance systems. They called it Governor Alpha, and then they updated to Governor Bravo. It's open source, so it's one that many DAOs have actually adopted. So Compound's a DeFi protocol built on Ethereum that allows users to lend and borrow digital assets, and then the interest rate adjusts algorithmically based on liquidity. And the protocol governed by comp token holders. The documentation states no expectation of profit. That's really about the law that they want to get around the Howey test to not be a security. You could claim future dividends. So that's why we actually think that any of these governance tokens, it has to be this expectation that in the future you are going to modify the rules to give your, otherwise there's no expectation of value, really. And so it uses a governance framework that's open source and adopted. The smart contract defines the rules, such as proposal initiation, vote casting, and execution. So they have 100+ proposals that have already been voted on, covering a wide range of topics, from process innovation, sort of changing the risk parameter, to business-oriented ones, hiring an auditor, developing a partnership, and then as well as governance and security features. So what is the voting threshold? They actually lowered their voting threshold to try and increase participation. Okay, currently the proposal threshold is 1% of comp tokens. Proposals must include executable code. So that's a big deal, right? Not everybody can write code. Maybe I guess now because we have co-pilots and stuff like that, people can write code. But before we thought of that as restrictive. The voting period is 3 days. At least 400,000 votes must be cast on chain, and then 50% pass threshold. And then there's a 2-day delay period for implementation. So we think of that as a security feature, right? Having this delay to try and basically undo something that might be malicious. Okay, so that gave you an example of what one might look like. And our data we collected from a lot of different places. Boardroom is pretty great, Snapshot, Discord, Masari, various forums, Dove metrics, documentation. I read a lot of white papers to basically try and figure out what they're actually doing. Okay, and so we collect data on 150 prominent DAOs. We hand code both their economic purpose and their governance characteristics, and then we match the DAO characteristics basically of their governance to proposal and price data. And so this came from, somehow the didn't get aligned right, but this came from our AAA PMP, and I've actually just seen the new data, so it's actually went up. I was a little worried that, because of everything that happened with the news in the past year would go down, but it has continued to rise, but it has plateaued, I'd say, around a little over 3,000 proposals per year. And what this is just showing you is that there's been a growth in the number of proposals, so we're getting a lot. But also, what we pointed out in that paper is about the concentration of voters. Who's actually voting? And I think there's a lot of worry in this space, and there's actually a really nice paper by Tao Li down at University of Florida that's looking at sort of these whales and thinking about the playoffs between them. But we do show in that paper that voting concentration has meaningfully went down over time. And I'm continuing to see this as we actually have airdrop tokens. We are getting more people involved in the process.
Sorry, a clarifying question. The number of proposals here are the ones that got proposed or actually got to the voting period?
Admittedly, I do not remember the PMP paper off the top of my head. I do know that some proposals basically get stuck in this stage of like, this is an idea and we haven't moved it forward. But we have, I know in our regressions, we are going from proposal vote opening date to vote closing date, and we have 10,000 plus there. So, I think that we're still getting meaningful ones going to vote. And then the content, I had talked about the compound examples. in this paper that we're working on crowd wisdom, but I think it helps everybody understand, we've classified all of them. They're really doing things that are so traditional and somewhat surprising to me. So they're doing many finance decisions. So finance, investment, payout, treasury management decisions are getting voted on by everyday people. Governance, so adjusting the process, authorizing responsibility, governance tools and meta governance features. They're doing management stuff. So how much should we pay somebody? What should our goals and strategy be? Who should we hire? Joint ventures, monitoring. Also tokenomics, a lot of this discussion of exactly how should it be designed, what should our supply be, our rewards and stakings, other parameter changes such as collateral and deposits. And then viability is a category that I created to try and understand really what's going on in this ecosystem. And it's thinking about things related to risk, upgrades of the protocol, which can be also risky. This is also community building and marketing, and then ecosystem integration. Should we, we just saw this big thing, I think, Lido, which is one of the popular ways to get liquidity from staking, they're getting rid of Solana. It's basically been a massive profit loss for them. And so, that's sort of deciding, oh, we don't want to integrate. And that's where something like that would go. Okay, so the three main categories we have are DeFi, infrastructure, and Web3. DeFi, I think, is what you would know. It's DEXs, borrowing, lending, liquidity, staking, which is really what I think of as the tooling companies. These are building bridges across trains. These are oracles. These are things like that. And then Web3 is where I'm putting sort of the NFT ones, the social clubs, the public goods. Okay. And so this is our sample. So as you can see in our sample, the 91 DeFi ones make up the vast majority of proposals. It's 6,500. Web3, we have another 4,000. And then infrastructure, it's a relatively small number. Okay. Then we classify the governance structures. We're actually considering 29 dimensions, but we put them into sort of 4 categories. So what I think of it as voting mechanism, voting process, org design, and security. And so this was, this is the Governor Bravo. Just remember that you had the 2 days to create it, you voting ends, it succeeded, it went forward. I also want you to recognize that there's some things that come up before that. What's the ownership threshold to propose? Is it a community versus a creator proposal? Is there uniformity of the information in the proposals? Did they use a template? Can a member delegate their tokens? What incentives are there to vote? How are votes weighted? Is there an option to even abstain? How long is the review period? Is the vote on-chain or off-chain? And then you can also have people who have become very complicated, where they say, hey, we're going to change the approval threshold depending on the type of vote it is. So removing a director has a much higher supermajority, or we're going to change the week duration and the quorum. So there is definitely a lot of nuance in there. That's what I want to point out. So what did we learn? The vast majority use a relative quorum. So a simple quorum would be that you have to get to 50%. I think relative quorum is only based on the number of people who are voting. Relative quorum with differential is just saying it has to be a big enough spread between the winner and loser. Super majority and then weighted voting actually ends up being the most popular. And so what's weighted voting? Typical ones you'll see are how long you've owned the tokens for, greater weight in the voting process. Okay, but this could also be some systems where they've decided it's one vote, one person. So you could do weighting in different ways. So conviction voting, lazy consensus, which is basically the opposite, is sort of saying everything's going to go through unless magically somebody is upset with it. And if somebody's upset with it, then we go forward and do it that way. And then voting requirements that vary by content, as the one I previously showed you, is about 15%. And then sort of ideas, do they start informally? Most do. So it's going to be on Discord or a forum. Requirements to create it, they must have X tokens or X tokens delegated to them. Uniform or transparent templates, which is increasing. It used to be really bad at the beginning. Requires executable code, so only about 8% do, because a lot of them are basically now paying for developer help if you have an idea. Off-chain for signaling, so snapshot, quorum requirements, and then votes can be delegated to individuals or DAOs, which we've seen a lot of vote delegation lately. Of course, then some people have wallets that are incompatible, which is a whole different issue if you've been following the news.
It's so everything here is on the DAO level, but not on the proposal level, right?
Right, these are all on the DAO level, and then when we get through the DAOs, then I'll show you what it looks like. We're using the proposals to really try and isolate a decision and how the governance process for voting on a decision might affect firm value, right? Okay. So then I guess the org design features are looking at sub DAOs, which I think yeah.
So in the DAO level, there's some DAOs that modify the voting mechanism during like on flight, like, you know, they start with a simple voting mechanism and move to weighted, or do you observe it, or most of the time the DAO is stuck with one voting mechanism?
So these are good questions. So we have well, this is something that we brought in. So we have about 624 proposals that are governance proposals, so that are trying to change the process. But remember, because this is all typically encoded in a smart contract, it's not that it's going to change on the fly. It's actually usually a voting process to actually change it for the next set of votes. And so this is actually, this was actually my original idea. I wanted to look at those and like really get the RDD and get this super clean identification. So what I will tell you about our paper is that 624, those usually either definitely fail or definitely pass. And so you don't get those nice close call. We have a relatively small sample of close call. And then this comes into issues about bandwidth and generalizability. So we have put this in as a robustness check. Which it does seem consistent with like what we're seeing, but I recognize, I'm not getting like these 150 or 300 DAOs there. You're getting a few DAOs that might have had something a little bit controversial. And so that was sort of where we went with this idea. But I think it's a great way of thinking about it, and it actually helps us understand this within firm variation too, or within DAO, sorry. So then the organizational features, we have these sub DAOs. Many have appointed what is something that I call board-like. They might call it a council, but it's the same idea. And then multi-year token vesting schedules for key members. And so that keeps them vested and interested in it, just the same way we think about executive compensation with options. Incentives to vote. 8% have rewards to that. And then this one always surprises me, and it's actually growing, and people seem to like it, those proof of participation or attendance badges, the Pope stuff. And then delay or time lag before implementation, a lot of them have that. The multi-sig core developer can override. Feasibility studies, which seem to be helpful, and then using SafeSnap. And then finally, I'll put this out, is that, it's not like there is open source here. So some people are doing the exact same thing, and we were trying to a little bit look at this. We do not put these features in our index, but the big ones out there, Governor Bravo I went through with you, but Aragon is gaining traction, and they have a lot of really interesting features. In particular, I love that they have this, if somebody wants to write a paper on this, they have this awesome adjudication system where they basically have created a court, and they incentivize via tokens people to actually like be on the jury. And so, I find that like a really interesting idea. Okay, so let's go through our main results. So we consider the relationship basically between governance and performance. The unique aspect of DAOs, especially relative to corporations, is that we can basically decision specific, right? You only have an annual meeting for corporations that you vote on sort of basically not really important proposals. Instead here, we net the moment that they decide to basically stop creating a game or to move forward and change the parameter or have a partnership with a different DAO, we see it. And so we think of these as actually probably a little bit better and more realistic of the impact on value than other studies that in the equity markets. Okay, so we're seeing this this decision making transparently. And then the main outcome we're looking at is market adjusted returns. We have a whole robustness check looking at very alternative sets of returns. So I don't think it's really the way we do returns. And market adjusted is really adjusting for those big movers in the market. So Bitcoin, Ethereum, the top 5 by market cap. Okay, so the 3 fundamental ones we look at, again, are inclusive governance features, restrictive governance features, and secure governance features. So let's see what happens. And we're doing them separately at first because a lot of people have complained about index construction. So before I get into it, that, what are indexes? This is how can you just add things up? They work in different ways together. We want to show that this breakdown into these sets, there seem to be working in the same direction. And then we're going to build it up and tighten it and then build it up even more to do it that way. So that's where we're going after. I understand there's some people who would rather see a principal components analysis, and I think we're planning to try and add that to the paper. But I did this because this is intuitively how, if you were grouping by rationale, I would group it. Okay, so what we see here in the inclusive features, which includes sort of these transparent things I went through, 3 out of the 5 coefficients are positive and significant. Okay, and then our controls here, so we're controlling for Dow age, assuming over time you sort of get better at it, and maybe the first time people don't know. We're including indicators for early proposals in that same sense. Vote duration, if you have a longer period, that might affect your returns, and we don't really have a great way to adjust for that. And then detailed functionalities. And that's where we're saying, I think DeFi protocols, so some people, especially in maybe gaming, which we put in Web3 category, might be worried that, hey, people are just doing this to have fun and there's a consumption value here and it has nothing to do with like a market value. If you're worried about that, then our controls for that should help absorb those differences and say that we just see it within the DeFi space as well. Okay, so then we see that. So this one is the restrictive features, and the restrictive features, sorry, I didn't realize it went off the screen. 6 out of the 8 coefficients are negative and significant. Okay, so sort of similar before, at least we're seeing lots of the same patterns.
Question, do you control for the turnout rate or the voting rate?
Sorry, what? Can you say it again? Repeat it, please.
Do you control for the participation rate?
Oh, for the number of voters?
Yeah.
So we have not put in controls. What is it? What is the particular concern about the participation rate? Just driving supply and demand in some sense?
Right. So I think some of the previous research have done in DAO, it's found like the participation rate, usually it's very low for some of the DAOs, and potentially you will have some issues with how that actually impact the outcome. Okay. Like whether or not that is, yeah.
I mean, I think that would be an easy one to put in, and I can't remember why when we were doing this, I didn't decide to do that, because I actually also looked at, so some things I can tell you that I have looked at too. I originally looked at token supply to try and figure it out. And I have put in controls for token supply to try and better understand, and that didn't affect it. But Ian and I did write a paper on voter concentration, so I have all of these HHIs, and I know the top 10 voters and stuff like that, so I could easily put this in. So thank you. Right. No, this is a great time. We do want to submit it finally soon, so I think we're close. It's going to happen before December. All right, so then these are the last one, the secure features. Again, we're seeing some that are very positive. And so this makes us think that, like, look, these economic rationales for why I put them the way they do, they sort of seem to make sense. They cluster together and you're sort of seeing these directions. You might have something that's negative, but it's not significant. Okay, and so this is actually showing the heat map of it all together, which I think is one of those really interesting things where you're just like, oh, they actually aren't as correlated as you would think. I think some people would have thought, oh, you have all these good ones together and that's what's driving it. They're not. Some things like delay might be totally, opposite of supermajority or something like that. And so we put them together into, first, just their individual I, R, and S components, so the inclusive features, and we add them up. And so the more inclusive features you have, great. And what we're seeing, individually it's now negative. This is what it was originally before. And then the secure one was positive. When we put it all together, as well as with our controls, that's becoming significant. And so this would suggest this is our main finding. Look, on these proposal returns that we think are real business decisions, we see these index features the way that they're working, saying inclusive and secure, the sort of new things about DAOs, the 2 really new areas that aren't traditional corporate governance, are improving returns. Whereas like actually the sort of craziness of supermajority and things that are legacy from Web 2 world, right? They're actually hurting returns. Okay. And that's really an important takeaway. And then we do it to better understand, we bring it up again one more time to full index. And so what this is inclusive minus the restrictive, right? Because it had the negative sign, plus security. And when we put it all together, we show that the index by itself, both with and without controls, is significant. Okay, similar point range too. And then we break it down to who's low, mid, and high to say, is there a particular one that's driving it? You know, do we think, what's the distribution like? Is it really coming from the bad governance people or what? And what we see is that actually it's sort of really consistent. So, you know, if you are low on the index, you're actually getting negative returns. Where in your middle, it's mid-range, maybe insignificant. And these people who have high, so have the best governance, really are ones driving positive returns. And so this makes us, again, feel reasonable about how we constructed the index. Yes, core team, I just saw the question. Core team overriding is considered a security feature. Okay, so now we are moving into robustness. So I think the return specification, right? We're looking at proposal returns. You might want to see something else. And so we've looked at raw returns. They're actually surprisingly similar, despite the fact that raw returns can be a little crazy. We also use this 3-factor model that's in the JF. And then I think the one that's more convincing to me is sometimes maybe why don't we just look at calendar returns? And so we're looking at weekly and monthly. Those are in our appendix, and you find similar results. And then finally, for a subset, because it is really hard sometimes to get it all the way back to the forum, people reorganize their Discord or reorganize their forum. So we have a subset of proposals that we can go back to the first time it ever appeared on a forum. And so then calculate, rather than from the start of the vote to the end of the vote, we calculate returns from the open on forum to the end of the vote. It's a subset, it's noisier, but I think it's similar. Okay. The next thing we look at is this. So this is just showing you the weekly and how you can see it's actually a little bit even cleaner, where we see the governance index this way, the low, the mid, and the high range of it. And it's the exact same pattern that you would hope to see, consistent with sort of the prior of the upper and lower quadrants of the governance index really driving the results. Okay. The woman who I really think she's great. Web3 is going just great. If you haven't checked out Molly White's coverage, really funny. But also, you know, we're looking at security. You want a real fact, right? You want to know maybe digital asset returns are inefficient because of whales, market segmentation, everything that people have really talked about. And so we should look at growth. And this is what I had sort of mentioned before. In security, we looked at who she covered in sort of her articles. I also used the guys from Notre Dame, Loughran and McDonald, their litigious sort of dictionary. I use that on the news. So we have a crypto news feed that's specific. So it's really tends to be like, you know, CoinDesk, stuff like that, rather than traditional news, because traditional news doesn't cover crypto as much. And we found that returns are significantly correlated with these real events related to security. And then this inclusivity is the things that we're looking at again. And so I got Twitter and Reddit followers for a subset. We also have the total value locked in trading volume for the DeFi protocols. And we can look at it and say, hey, is these inclusive features correlated with what we would expect to see if this is like really something that is adding value? Okay. And then this is what I had sort of mentioned too, is that you know, an RDD is awesome. It gives you like, you know, a nice clean point estimate. The identification assumptions are really mild. All you need is like continuity with the forcing variable. And so you would think if a close call vote, you could have this nice counterfactual. We have 624 governance proposals within the optimal bandwidth, and I've looked at a couple different ones. It's actually just a much smaller set. And so, but as an example, 1inch had a proposal to reduce their quorum threshold, which in our thing, that would have made it a less restrictive part of the index. Okay, and so we can do this, you know, we use this to basically understand the counterfactuals and, you know, finding consistent evidence. Again, though, small sample, hard to like exactly say. And then this is something that we've been starting to look at more, and it's really cool, I think, as these heterogeneity tests around proposal origins. So I have a subset again where I have it classified. If you go back on the forums, the same set of people, was it a contributor or was it a core member who did the proposal, right? And we find that actually these contributor ones, so this is part of this wisdom of crowds, much higher returns for the contributor ones, which is sort of, again, going back to some of these ideas that we had that, you want inclusive governance features that allows broad participation in the system. And so these airdropping and governance tokens, I mean, even Ian and I thought this might be a separate paper to even look at this even more, but it seems to suggest this might actually be a positive thing. Sorry, I went the wrong way. So in conclusion, and I'm happy to stick around for questions and stuff like that, I think we provide some of the first evidence on governance mechanisms used by DAOs and examine their value implications. And the structures that promote inclusive decision-making and security are positively associated with DAO performance. And those restrictive ones, much more associated with the traditional corporate governance, seem to be impeding reaching consensus and are associated with worse performance. So if you go to a regulatory standpoint, this would suggest that regulators, again, should not push DAOs back towards the corporation form. We should allow them to thrive and think of this as really maybe a new structure to optimize economic activity in the new digital era. But with that, I leave it to questions, and I really appreciate you taking the time to listen.